What's going on, everybody? Javi back with another video. Got a lot to talk about with AMC, so let's jump straight into the technicals. Alright, so we've got Thinkorswim opened up with AMC, and I wanted to talk about what happened last week. So last week we opened up on Monday at about $55, so I have an arrow right here pointing that out. So then after Monday we saw that the price action was jumping around between $44 and $55. On Tuesday we jumped and tested that $55 price, and then we fell down all the way to $41. Now Friday we opened up at about $44, and then we took a nice dip to that $41 price range. So if you guys can see, we went down from $44 to $42. And then after that, we jumped up all the way up to $55. Now, this is a really big indicator for me because Fridays are usually sell-off days for most stocks. Now, they're sell-off days for a couple reasons. The first reason is that Fridays usually we have lower volume for stocks, and that tends to make them weaker and more manipulation can happen than most other days. Second is traders like to be flat on Fridays, or in other words, they don't like to hold on to positions over the weekend. So that is also a reason why some stocks tend to sell off. And then lastly, option calls expire on Friday. Now, most of the time this is weekly, but now you do have your monthly option calls. That's the third Friday of the month. The option call can potentially move the price action of a stock. Now, they are not directly correlated. However, if you have an option call that expires on Friday and it's in the money, then it's going to bring the price up, while if you have a option call that is out of the money, that is not going to bring the price up. It's actually going to move the price of that stock down. Now, I do have something that I wanted to show you guys, and that is the options. So I have right now pulled up the options for AMC expiring this month, and that is this Friday coming up. So if we see the $40 price strike, then we'll see that we have 26,000 volume for that Friday that we just closed on, which was June 11th. And then we have at $50 strike, we have 34,000 volume. So this is very important because if this Friday coming up we can push above $50, then that is going to potentially start a gamma squeeze for the next week going forward. So that $34,000 volume is really important for us and retail investors to look at. So we want to see if the stock can shoot above $50. Now the next big volume for the options this next week is going to be the $60 price, and this is all because obviously there's psychological levels when you break above these 10 interval levels. So obviously the next interval level is going to be $60. So at $60 we see that we have another big volume at 21,000 volume for that Friday that just closed. So keep an eye on that, guys, and let's see if we can break above $50 and close above $50 on Friday, because that's obviously going to increase the potential for a gamma squeeze. If not, the short interest can potentially happen. And also $60. Now from $50 to $7, that's a nice push, but we also have a lot of volume at $70 price strike price. So keep an eye on $70 as well. So Friday recovery is really important for a couple reasons. So usually, like I just mentioned, stocks tend to sell off on Friday, but by AMC dipping down to that $41 range and then recovering and closing above what it opened at and almost above what it opened at on Thursday, that shows that there's a lot of strength in AMC and we are not being manipulated by these hedge funds. Also, it gives a catalyst for the weekend. So if you're an investor and you have a lot of money in AMC and you see that it's starting to recover, then you're going to be more likely to share it to other people. So this is going to potentially add new investors, because investors who are unaware of the movement, they are going to look into it over the weekend and then potentially buy into some shares Monday come the opening of the stock market. And then potentially this could cause a jump in the stock and maybe move the strike up to that $50 range, if not the $60 range, and maybe cause another gamma squeeze to occur. So now a few things that I'm looking for this coming week is, now that we are moving around this channel and we move over to the 4-hour range, we'll see that the RSI for AMC is quite low. So for AMC, when it went up to the $77 range, we could see that we were hugely overbought, and obviously that is going to be an indicator that the stock might move down. However, when we are in an uptrend, we don't want the RSI to be completely oversold, but being in this channel of $44 to $50, that's going to show that we are not completely overbought anymore, and we have another potential for another leg up. Now another thing to see is the MACD. We can see on the MACD that we are starting to converge over to a potential buying period. So this is something to see, because back in June 24th we can see that we were in a position where we were in an uptrend, and then over in July 2nd we started to dip to a sell-off period. So now it looks like we are going back into a buying period, so that's another thing to keep an eye on, as this may be another leg up, and then hopefully come this week we can break above that $59 range. If we break above that $59 range and close above it, then that can be an indicator that we are breaking past this channel. So you can see on the chart I have $60.50 as an alert, because I'm wanting the stock to break above that $59 range and close above that $59 range. Now, not only do we need to close above it, but the next few days we need to make that resistance a new support. Now, if we channel around that $60 range, that's okay, because it's stair-stepping up to that all-time high of $77.30. So if we make that $59.93 our new support, and we start testing that new all-time high, that's going to cause more investors to have a new sentiment for the stock and continue to add on to their position, as well as option investors to buy more options that are out of the money in hopes that those options become in the money. Alright everyone, so hopefully the stock this week breaks above that $59 range and we break past this channel and we start stair-stepping from the $60 to the $70 and break that all-time high. If that happens this week, I wouldn't be surprised if we see a gamma squeeze, and that can potentially be an indicator that the short squeeze may be happening sooner than later. Now this week we also have the proxies starting, so individual investors can start voting on how much shares they hold. So that may be another catalyst for AMC to move up. Now that's one catalyst that could potentially start the short squeeze and another increase of the price. But we need to start seeing some more volume, and that's going to be another catalyst for AMC to start moving up, as well as when we see AMC showing some numbers for earnings. We need to see some good earnings, such as decrease in debt and increase in revenue. With that all said, we also need to shift our emotions away when we see AMC diving down. When we see that AMC is starting to dip down and maybe test some of the support levels, we need to maybe just look away from the stock, or maybe look at the stock from a longer term perspective. Instead of seeing the stock from a minute or 5-minute chart, we need to start seeing it from a 4-hour chart, because that starts giving us another perspective, and that takes the emotion of, oh man, the stock is going to dip and I'm going to lose money, for those new retail investors. Now obviously for those older investors who bought in at a lower price, that's not much of a concern. But if you are buying in just now and your cost average is $44, $50, $60, then when you see the price dip down and you are momentarily negative, that may cause some selling, when really the price, in my opinion, still has a long way to go. If you guys like this video, please make sure to click that like button and subscribe, and comment down on what you guys are doing this week, and I'll see you guys next time for another video. Peace.